Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, October the 7th. The year's 2024. Let's talk trading. Weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. And as we start the week off, let's always remember and never forget to use risk management. Let's make sure we don't lose any more on any one single trade than we are willing to lose. Taking a look at the weekly chart, we can see that the dashboard shows all those open gaps have filled. And at the present moment, you can see here, we're below the weekly pivot. Haven't taken that out yet. And we are in the lower wick zone of the previous week's candle. So it looks like we broke below the low and came back up. Looking at the monthly, we're in the lower wick zone of the previous month. Back to the week, about 9 pips above the open. 45 off the high, 30 off the low. And it's same for the daily, considering this is the first day of the week. So we are establishing the weekly opening range. Notice we're below the monthly opening range, above the yearly opening range. And for the year, 376 pips above that yearly open, 347 off the high, 788 off the low. We gave up a lot of pips last week. Now we had an inside bar 3 days ago. We're well below that. Plenty of inside bar action for the inside bar traders. $75 pips of range. Notice the yen pairs are still moving in the 100 pip range. So if you're trading pound yen, euro yen, dollar yen, Australia yen, Canadian yen, you are being blessed. What I don't see on but the New Zealand US dollar, you can see here, there's not much room. New Zealand yen, plenty of room to trade there in terms of pips, daily range. You can see here this hour we crossed above the weekly open, came back down. So for you daily, weekly open cross traders, you can see past 3 hours have given you opportunities to take at least, looks like 8 pips. Green rats are feasting a couple of times so far. So you can see this time it made a higher low, almost a flat top there, but you can see we broke it in this M15. Almost filled that imbalance that I see right here. Bambino flex indicator said to go short. Price near the pivot is a short. And so you can see here that paid off once today. We took out that daily pivot. Once again, there was a short trigger at the daily. Weekly, we haven't hit it yet. And monthly, we have taken it out. The wick zone, not much of a candle body, so we've been in and out of the wick zone. Weekly range right now is 75. Just starting out once again. We broke out of the previous week's low by 10 pips. And high minus the close 50, close minus low 25. So weekly rats have been rewarded, along with the weekly open crossover traders, 54 high minus open, 21 open minus low, so they were rewarded. Looking at the simple price action chart here, you can see the range of the M30 over including this hour back 4 bars, all 13 pips or more. Plenty of movement to go in and take some pips. You can see right here there's a flip-flop. And it occurred right at the open. That's kind of interesting. Flip-flop box on M30. Once again, kind of a flat top, high or low. Look for the break to the upside. Here we had a higher low trade, signal short off a 3-ball, almost 8 pips at the moment, putting in a 1-ball across this flat range. You can see lower highs, flat bottom, pushing down. 1-ball. For me, I'd be out of the trade, take my pips, be happy. Whoops, not quite ready for that. And once again, ATR for October, ATR percentage, we're at 84, which is well above the low. Range by month, 330, so we've exceeded the October 2023 range so far. Trade reminder. Let's look at the week at the moment. And we're dancing right around that open. Price still inside that lower wick zone. Sellers now weak control. Looking to fade to pivot buy. Lower high, lower low indicates downward bias. Oh, let's see. I had a trader ask me about statistics. Was asking to show how to use statistics. I guess he was saying, you know, how do I apply these? The thing about statistics, one, you can use statistics to determine which pair or pairs to trade. I think I showed that based on range. You can use statistics to tell you when to trade. So, for example, which hours of the day are best to trade the instrument, or you can use it in timing, such as like the wick zone. It's like, you know, price is going to leave the wick zone, has a 70% historical statistical history of leaving the wick zone. So you know if price is in the previous day's wick zone, you can use that say, hey, it might be time to trade this because chances are it's going to leave that wick zone. And finally, you can use statistics as a bias of which way to trade, short or long. So back in the olden days when the pound used to make 150 pips almost every day in range, we knew that if you wanted to look for a reversal and trade back towards the open, make sure the daily range was at least 150 on the pound. And on the euro dollar, it was 100. Now, since we don't have many 150 pip days, that's when you use statistics to let you know when the quote-unquote market has changed. You can see it used to be 150 pips, but the range has been going down over the years. So now you're going to have to adjust with the market or to the market. So those are the overall ways to use statistics in trading. So I'm not sure if that trader is listening. Hope he listens to this video. So if you have a more specific question, I guess probably the best example I can give you is the rat zone, because based on statistics, with the old rat, let's see, we've got 15 to 35. That's like, used to be a 20 pip rat zone. In other words, price would put in a low, price would put in a high, and chances are it's going to move 20 pips off of those. But once again, the range has to be large enough to look at that. And I think we've changed the range to, well, we can look in the indicator here. The range has to be 50 pips, minimum range. That used to be, I think it used to be at least 60, if not 75. But then I thought, wait a minute, why am I having to run that? Why not just write an indicator and let it decide where's the 20% zone, where chances are it's going to be out of this level or below this level 80% of the time, and above this level 80% of the time. And so that's when the smart rat came in, and you can see how those zones tighten, and every day it recalculates, because I believe it uses the last 100 days, or does it use less? Of course, you can change that yourself. No, we're doing 250 days. That's why I looked it up. So many indicators, I can't remember all the default settings. So, but of course, as a trader, you can change that. And then you can see where the difference is. So you might put one instance at 250, you might put one at 30, one at 60, and see, okay, where's it making that change? But as you can see here, this wouldn't have been a trade at this time, but right here, you can see that trigger gave you a few pips advantage. So, fellow traders, hope that helps. Like I said, feel free to ask questions. The more specific the question, the more specific the answer. And always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.